Welcome to Crypto in America Live, the only show bringing you candid conversations on the biggest news stories, legal issues, and policy developments shaping the crypto world every Friday afternoon. Hey guys, happy Friday.
Happy Friday.
Happy Friday.
We made
How's it going? Yeah, busy week.
We got to come up with a new start to the show. Busy week. It's always a busy week.
It is. Well, it has also actually been a busy week for the last like 6 weeks in a row. But yeah, that's fair. We can workshop
No
that.
summer Fridays here. Yeah.
Yeah. Busy week in the market, busy week at work, busy week all over, busy week on the show, busy show we've got coming up for you all today. We have a slate of excellent guests, as we always do. I might be a little bit biased, but I think we always have some great guests on Crypto in America Lives. We have Katherine Kirkpatrick Boss coming up to break down the CME CFTC lawsuit. Now that the dust has settled a little bit on that, we have Ilya Brovin. He is the Chief Growth Officer at Sumsub to talk the state of compliance in the industry. And we have Matthew Hogan, a detective at the Connecticut State Police. We're going to get his take on what the Clarity Act passage means for state and local law enforcement, as well as his take on the debate over the BRCA going on in Washington right now. But before all of that, let's get into the markets, because that has been the highlight of this week, I think, in conversations. All the podcasts I've been listening to, all the spaces on X have been about the direction of the markets. And if we take a look right now on my CoinGecko, which I have pulled up on my laptop, Bitcoin still below 60,000. It hasn't been there since October of 2024 was the last time that we saw Bitcoin fall below 60,000. But I'm keeping on being reminded that it is not as bad as it seems. And you guys can probably back me up on this. We have gone a lot lower in the past.
There's definitely room to go lower. Hopefully it doesn't, but it's been kind of a brutal stretch for the crypto market. I'd probably say over the past, like 6 to 12 months. I mean, as you mentioned, Bitcoin's below 60. It's the first time since October 2024, I believe. And I mean, Ethereum's down nearly 50% on the year. XRP and Solana have fallen. Just kind of a bloodbath currently.
Yeah, I think it's not financial advice. I think it's probably a combination of a couple of things. One is like the industry is still kind of recovering from 1010. Like we just haven't seen the same amount of liquidity come back to the markets since October of this past year. We also have seen like really positive jobs data and like a much lower likelihood that we would get a rate cut this year. So I think that's playing into it. And then you're also seeing a bigger, broader sell-off of like AI stocks and a weakening of the market kind of like overall. So not necessarily a crypto problem, but it does seem like crypto always suffers more than the average tech company when things aren't going great. So, and then you also had like the sailor strategy sales, that I think are putting a damper in the market as well.
Yeah, that's coming up on in the next couple of days. We're going to see whether strategy decides to pay out a higher dividend on stretch or not. That matters a lot to traders and sort of the sentiment around Bitcoin right now. I think because strategy has such a big position in Bitcoin, right? I think it has now outbought Bitcoin over even BlackRock. It has a higher position than BlackRock. Sailor owns 800,000 Bitcoin, worth over 50 billion. At these market prices, that's still a lot of money, but his position is notable, and whatever he chooses to do with stretch is going to kind of inform traders, how to kind of think about Bitcoin. I think because whether he can fund the ongoing paying of that dividend matters very much, kind of to Bitcoin's price, right? If Bitcoin continues to go lower, how is he going to keep funding it? That's a big question that I've heard market participants talk about. But Strategy's loss on paper has actually reached $13 billion, which is more than the market caps of Dogecoin, Zcash, Cardano, and Chainlink. So that's pretty notable.
Yeah. I think, there's a lot of dependency on price discovery when you have like one holder being that significant. And so I think strategy has kind of been like the backstop. That's the way the market has treated them over the last couple of years, is they're always going to be a buyer. And so now I think like the kind of realities and constraints of running like a publicly traded company, strategy has gone up and down before. and we'll see what they decide to do. As you mentioned, Ellie, with that like dividend payment, do they continue paying those dividends at that excuse me, at that kind of a rate, or do they acknowledge that the market is a little bit softer because their equity value is down as well, right? So
Yeah.
it'll be interesting to see kind of as Sailor goes, Bitcoin goes in some respects.
Yeah. And then Ethereum too has been down. I saw something pop earlier about Bitmine, Tom Lee's Bitmine immersion. It's the other buying vehicle, but for Ethereum, it's going to be included in one of the indices. The Russell 1000. It's going to be included in the Russell 1000, which will give it more exposure to institutions. So another DAT, as it were, getting more institutional exposure. I think that's pretty notable as well.
Yeah.
But we'll have to see what happens with the direction of the markets. Not a great week, but there's always next week, right?
Yeah.
I think another symptom of these markets is also sort of these, layoffs we've been seeing as well. BitGo is the latest crypto firm to lay off staff. It announced last night that it's going to cut 15% of workers, roughly 90 jobs. Mike Belshi, the CEO, we had him on the podcast recently. He called it just a one-time action and said that he's going to refocus the company's strategy on core areas like security, trading, AI infrastructure, and settlement. And it kind of goes to this broader theme that we've seen of other crypto companies laying off staff. I think this year we've had like half a dozen: Coinbase, Kraken, Crypto.com, the Ethereum Foundation. It's scaling back in sort of this era of AI, right? To kind of trim down ahead of, what's going to be a lot of machine technology taking over.
Yeah, I think it's a bit different too from like previous downturns and markets. Like the layoffs aren't necessarily solely driven by like the need for survival or to preserve capital, but it's kind of like reallocating resources. And I guess it is preserving capital in that sense, where it's like a lot of these firms, to your point, Ellie, are reallocating resources towards AI infrastructure, automation, and kind of like slimming it down because you might just not need that many people anymore.
Yeah.
Yeah, well, we're also talking about publicly traded companies doing layoffs, which is like weird to talk about in crypto. I mean, like PayPal, I think also cut something like 20% in the last year. One of the pros or cons of a public traded company is that it's expected to make money, right? So as Jackie, as you mentioned, like not necessarily a survival thing, not necessarily like an existential, we can't raise any more money, because we have seen a lot of fundraising announcements in the space too, I think, or we've at least seen them kind of pick up. So yeah, this to me is more like public company restructuring stuff, for a newly minted kind of publicly traded company than it is maybe like a broader expectation that that we're running out of capital, like in the ecosystem somehow.
You think it's less of specifically for BitGo, because we've seen Coinbase and some of the other exchanges do similar things, but just a broader symptom of trying to preserve capital in this environment.
I love seeing the Ethereum Foundation up there. Yeah, I don't know if I would put them in the same bucket as some of these other companies. Just
they are not a publicly traded company.
The way their balance sheet is, the way their balance sheet is constructed is a little different. But yeah, no, it's AI is like a great excuse to cut folks. Strategic direction, like all these things, I think they're real. But we'll see where we go from here.
Yeah. Well, Kalshi sued Illinois this week over the same law that we've been talking about here on the show, the one that would impose the 20 basis point tax on crypto transactions in Illinois. In there as well is a levy on gross receipts from sports-related prediction market contracts, and it's not a small levy either. It's a 15% tax. And so Kalshi sued Illinois this past week. The CFTC actually also amended an existing lawsuit against Illinois to sue the state from putting this tax in place. Unlike the crypto tax, which I think takes effect next year, this would take effect on July 1st. So next week it's coming up. So they're suing to prevent this from happening. Illinois is one of the more aggressive states that have argued that sports betting belongs to the states. It should stay in the states. The CFTC and the federal government have no jurisdiction when it comes to regulating it. And yeah, the CFTC is suing, Kalshi is suing. When it comes to prediction markets, everybody is suing each other. It kind of seems like every other week there's a new lawsuit in the works.
There's an update here. Yeah, sure. I mean, I think the outcome could have pretty big implications beyond Illinois. And Gerald, feel free to chime in here too. But it's like, if the courts side with Kalshi, then it would reinforce federal oversight of prediction markets and limit states' abilities to impose their own rules, right? But then if Illinois gets the better end of the stick here, it could encourage other states to do something similar with taxes or regulations, kind of doing like this patchwork, fragmented state-by-state rules for regulation of of prediction markets.
Yeah. And so this has been, I think it's kind of the same fight, like different flavor. It is like preemption is kind of the core issue here. The CFTC has argued over and over again that because these are futures, there's federal preemption, and they have, they have the ability to regulate these markets. States are saying, no, we still have a say here. I think it'll be interesting to see, to your point, like whether this ends up in the Supreme Court or like where we kind of go from here. And then I'll also just point out the timing. Like this was kind of the only option because I think Illinois is out of session now, right? And so whether it's the crypto tax or this, like there's nobody to talk to. You have to go to court. So
what does this mean for the timeline though, Gerald? Because if it goes into effect July 1st, like would like a judge come in and put like a temporary restraining order on it to kind of pause it, or?
Yeah, I haven't read the complaint specifically yet. I think the first thing you would do if you're Kalshi is just ask for an injunction. So just ask a judge to stop that from going into effect on that timeline, and then let it play out. And this happens a lot between kind of the federal and state governments. You see some initiatives that are rolled out by presidential administrations get challenged in states, and so it's always usually there's like a big kind of like venue selection process here where you can get a competing opinion from a federal court in Northern California and a competing opinion from like the Fourth Circuit, which is more the East Coast, and those courts just have very different dynamics. And so, yeah, the idea, I guess, would be that this just works its way through the courts, and maybe there is an injunction. Maybe it's allowed to roll out temporarily, but it's kind of going to be up to the federal court system to play this out. And then what you could also see at the same time is new precedent is being written by other state courts all the time, right? So the fact that you're fighting this in like, I don't know, 6 or 7 different venues at this point, and those courts are all made up of like very different people with interpretations and some expertise and less expertise in these areas. Like it'll be interesting to see how the different rules or precedents get rolled out as these lawsuits progress, and whether or not they kind of impact each other, or whether the Supreme Court steps in and establishes, preemption on this issue. So we'll see.
It's so great having a lawyer on the show.
Not a litigator, but yeah, I did take that class. Yeah.
I love it. All right, quick update on Clarity before we move on. So we all know that lawmakers are officially on July recess. So they're off for 2 weeks. They come back on the 13th of July. And I reported yesterday that following the housing bill saga, as whoever has not been following this, basically there was a bipartisan bicameral housing bill that the Senate and the House both agreed on. And they sent it up to President Trump to get signed a couple days ago. And at the 11th hour, Trump decided not to sign it and said, I'm not going to sign this until you guys pass the Save America Act, which is basically voter IDs for everybody if you want to vote. That has been a very controversial piece of legislation. People say it has no chance of passing, but he really wants it to pass. So he has said before he will not pass any other legislation until the Save America Act is passed. What that means for Clarity is unsure. Republican leadership has said that the Clarity Act is a priority, and they will be bringing it to the floor when they get back in July. John Thune said that they're going to prioritize the defense spending bill the week of the 13th when they get back. So that kind of leaves, the weeks after that open for Clarity. But as we know, we have some outstanding issues. We're on break now, and there have not been any breakthroughs on ethics, on the BRCA. Law enforcement is still unhappy. We saw that letter from a couple of those agencies to the administration this past week. They said despite all the talks and the meetings that we've had, we're still not happy, and we still are not, happy with the BRCA, and we want to see changes to it. And then we also have disagreements over the Senate Ag text. So that those bills still have not been merged together yet. So if you think about it, there's a lot of outstanding issues. When they come back, there's a 4-week window to get this on the Senate floor and to get all the votes that they need, right? The Senate votes, they need 60 senators to pass this through and then send it back down to the House. Gerald, you and I have talked to 2 people in the last 2 weeks, Rep. Dusty Johnson in the House Ag Committee and Miller from Solana Policy Institute, who both told us that we should not be counting on the lame duck session to get anything done, and that the House should pass the whole bill. Senate and House should pass this by August 7th, which is when the Congress goes back into August recess, or the bill is, its chances drop precipitously, I think is what Miller said. So bottom line is there's still a lot left to do. Lawmakers are now out for the next 2 weeks, but behind the scenes, there will be a lot of work going into this while lawmakers are out. As you guys know, staffers do about 85% of the work on these bills behind the scenes. So paper will be passed. There will be a lot of negotiations happening. So you can expect work to be being done. I think Senator Lummis mentioned there's potential for a draft to be shown over these next couple of weeks. So we'll be on the lookout for that. But yeah, we basically go into the next 2 weeks with not a lot having been done in the last couple of days or so, at least anything tangible, any agreements that, the Dems can come away and say, hey, we have an ethics agreement, or there is, the BRCA is absolutely going to go into this bill with no changes. So that's kind of the state of where we are. We'll see what happens in the next couple weeks or so, but it's always fun. There's always so much stuff to cover on the Hill.
Yeah, it's the one thing that I think we've talked about before is like timing is not on our side. Like the legislative calendar,
put it on a billboard.
Right? The legislative calendar just is what it is. And I think so. I was on the Hill with the Digital Chamber on Tuesday, talking to a lot of congressional offices and a lot of folks. Senator Lummis actually also talked to us a bit there about where we are, and I think it reflected a lot of the conversations we've had. I think she also just shouted out, and we've talked before on the show about how many people are working even out of session like on this. So Harry and Patrick at the White House, the digital assets team, folks like Chris Land from Senator Lummis's team, just all the like Senate Ag, like all the people working to try to get us to a solution here. And so, the one thing I didn't have on my bingo card for this past week was Catholics are also now apparently anti BRCA. Was not expecting that one. But yeah, it's there's a lot of people working really, really hard to try to get this done. We're in kind of a sprint mode right now, just because the other thing that you mentioned is, crypto, when you actually go to the Hill and you're talking to these folks, like our industry tends to think of itself as one of the only priorities they're dealing with in DC. And that's, I think, like in some ways appreciate all the emphasis that has been put on getting this done. But to your point, like there are other pieces of legislation that are going to have to make their way through. And then when you get into the fall, there's all kinds of appropriation stuff that needs to be done. So yeah, it's crunch time, and appreciate all the work everybody's doing to try to get us across the finish line. But something's got to move.
We will see. But let's move on to our first guest of the hour. And we're going to go back to talking about the CME and the CFTC, because for those of you that don't remember, it's been about a week since the CME formally sued its own regulator over its decision to approve perpetual futures. In case you guys missed it, which most of our audience I'm sure did not, we've been talking about it and it's been all over crypto Twitter. Here is outgoing CEO Terry Duffy on CNBC on why he decided to take on Chairman Michael Selig at the CFTC.
What do you want to accomplish with the lawsuit, Terry?
Well, there's a couple things. First of all, under the Dodd-Frank Act, and this will all be laid out in the lawsuit, under the Dodd-Frank Act, it clearly defines what a swap is and what a future is. And when there's two parties exchanging payments to each other, that's deemed a swap. So if anything, these products that he supposedly approved as futures are not futures. They would be swaps. And if they're swaps, Melissa, as you know, there's different requirements in order to participate in the swap market, such as 5-day margin, such as swap requirements for the users to register as swap dealers. There's a lot that goes into the Dodd-Frank legislation. So the case law, as I stated, was pre-Dodd-Frank. It had nothing to do. So he circumvented the Dodd-Frank Act.
Joining us now is Katherine Kirkpatrick Boss, General Counsel at StarkWare. She's been digging through the complaint and argues that some of the conventional wisdom around this case might not be right. So excited to get into this with her. Katherine, welcome back to the show.
Thanks so much for having me. Happy to be here.
Good to see you.
Yeah, welcome back. Katherine, I feel like some of the louder takes that I've seen, maybe outside of the crypto world, of course, on crypto Twitter, is that the CME has a solid footing with this case. But I read your thread, and you kind of came out of this, I think, a little bit less convinced about that. What do you think that people who are on the other side of that argument are getting wrong?
Well, first, Dodd-Frank definitely defines swap. It does not define future. Future is not defined anywhere. It's not defined by Dodd-Frank. It's not defined in the Commodities Exchange Act. So that's kind of the one thing. And by the way, that was not in the complaint. They talk a lot about the definition of swap. But I'd say that, CME's two biggest arguments are, one, that the CFTC is violating the Commodities Exchange Act because perps are swaps. I'll get to that in a second. And two, the CFTC acted arbitrarily and capriciously. They have a big problem with the fact that the CFTC allegedly essentially copied Kalshi's own application verbatim without independent analysis. It ignored its own prior position in a bunch of enforcement actions, calling perp swaps, and there was no public comment period, and they turned it over in one day. All of those things might be a little troubling to some degree, but they're not illegal. There is no legal requirement for the CFTC to have a comment period or to take 40 days to consider this. That is not a requirement. And also, it is quite normal and appropriate legally and practically for a regulator to reverse course years later. Look at the SEC. It's clearly reverse course on every aspect of its enforcement action. So the second argument entirely, it might be somewhat troubling from kind of a public policy or perception view, but it's not legally incorrect. So that alone I have a problem with, or I wouldn't say I have a problem, but I think it's a little bit of a weak argument. On the first argument, like I referenced this, there's no definition of future. And CME's argument really hinges on this one very specific term, future delivery, as a requirement for future. So they're saying this has to be a swap because there is no future delivery. And, to have a future, you need an expiration date. You need delivery of the asset. But again, there's no law saying that. There's been no clear precedent requiring that phrase, future delivery, means fixed expiry. So my question is whether we're going to see another Supreme Court fight, first on prediction markets and now on perps. Busy times for the CFTC.
Yeah, definitely in very busy times. Katherine, I wanted to get a little bit into the weeds on this, just in terms of the arguments being made here. So you kind of pointed out there's fundamental argument being made that a perpetual future is a swap, and then pointed out that there is no formal definition of future. And you have, I guess, some opinions on where perps kind of fit into this. Can you just tell us more about the mechanics of those instruments? I know you've been in the space a long time. Just tell us what's the difference, and then what are you really paying attention to as we try to figure out what exactly a perpetual future is?
Sure. Yeah. So I'm on the board of Architect, which is an incredible Bermudian registered perps exchange, actually listing a multitude of non-crypto perps, perps on metals, FX, etc. Architect also recently acquired a DCM. So this is something Brett Harrison, the CEO and founder, has been thinking about for years. Everybody's excited about perps because the asset is huge. There's major efficiencies without an expiration date, right? And I'd say that the crux of the issue, why are perps so great? Okay, there is no expiry. There's no expiration date. And, it uses a funding rate mechanism to maintain price convergence with the spot price. And this, traders love it, frankly. And you can read a lot or listen to a lot. If you listen to a couple different Law of Code podcasts on that, if you want to go real granular for perps, there's efficiency for traders. The market loves it. This is why we're seeing trillions in volume offshore. And, from a public policy perspective, I think the idea is we've seen this proliferation of this asset overseas with crypto perps, with other perps, like the discussion now is compute perps on compute power. It is an incredible way to hedge the underlying asset. And do we want this asset onshore in a regulated fashion with major US institutional players, or do we want them going offshore to do this? Obviously, from a public policy perspective, I'm not going to speak for the CFTC, but there's got to be thinking here that they want to find a legal mechanism to recognize perps onshore. And that being said, I also want to correct a mistaken assumption everyone has is for years, people have said perps are illegal in the US. Perps are not and have never been illegal in the US. They were just considered swaps, which means they needed to primarily trade on swap execution facilities, not designated contract markets. Huge distinction. It is much harder for retail to trade on SEFs. I don't want to say impossible. I mean, we're a lawyer, or Gerald, you and I are lawyers. Words have meaning. But effectively, if perps in the US have to trade on SEFs, it makes it improbable for retail traders to have access. So this big Kalshi decision, this unlock of perps in the US, by calling them futures, they can trade on designated contract markets and open up access to retail, to institutional traders in a much easier, faster, more efficient manner.
Katherine, just real quick for our audience, what is a SEF?
A swap execution facility. Yeah, I know. Like, this is the problem with derivatives. It loves acronyms.
So does crypto, though.
And crypto,
they're made for each other.
I mean, crypto
That's what the
uses
show's
even weirder
for. We're
words.
explaining things.
So, yeah, the crypto words make no sense to the average person. So, I mean, we can't throw stones here. But if you look at the broader derivatives landscape, like you have the designated contract market, which is effectively an exchange for derivatives. And then you have future commission merchants, which are the brokers. And then you have the DCOs, which are the clearing houses. So that's the derivatives market. And retail can have access to futures in this derivative landscape. DCMs, I keep joking, are so hot right now because DCMs are prediction markets and now DCMs are perps. So, and there just aren't that many of them. Everyone's clamoring to get that license, to acquire them. So this has been a huge, this is why everyone's obsessed with the CFTC right now. Swap execution facilities are for swaps, a different kind of asset.
Got it.
Yeah. I know also in your analysis, Katherine, you kind of flagged that post Loper-Bright courts defer less to agencies. Does that overall environment help CME's challenge the CFTC classification, or does it kind of weaken CME's argument that you change your mind from Binance and now here we are?
That's a great question. And you're right to summarize it. It was actually an incredibly meaningful, nerdy decision, meaning all the lawyers were like, Loper-Bright, and everyone else is like, I'm going to stop talking to this person at the cocktail party. I don't know what they're saying. It was a big deal. So it helps and hurts CME. It helps them on the swap definitional arguments because the courts are going to look at Dodd-Frank, at the definition of a swap. But it also means that the CFTC's prior classification of perps as swaps, and in CME's complaint, they name, I want to say, 5 or 6 different enforcement actions where the CFTC characterized perps as swaps. Those prior classifications carry less weight because that was agency discretion, which is less important with Loper-Bright. And as we discussed before, while Dodd-Frank defines swap, it doesn't define future. This would be a lot cleaner if it did, because then it would be easier to categorize this. But I'll also note products don't actually necessarily need to be swaps or futures. The CFTC has discretion to do what it wants in a justified manner. with novel instruments. So you have to look at an asset and say, does it have more characteristics of a swap, or does it have more characteristics of a future, and make your argument? And that's exactly what Kalshi did. It said, just because it had a lack of expiration, it had every other characteristic of a future, not a swap. And this lack of expiration is not determinative. And the CFTC agreed, saying expiry is not the one thing that changes it into a swap.
Katherine, this might be an oversimplified question, but couldn't CME just launch its own perp?
Yes, it could. It has a DC. Yes, I mean, well,
isn't this all about? So is this all about? Is this about competition? I mean, I know Terry Duffy said in the interview he doesn't shy away from competition and he's ready to take this on. But ultimately, like, what is this? Is this lawsuit all about? Kalshi having a competitive advantage here, or any other exchange for that matter, over the CME?
Absolutely. I mean, CME has multiple DCMs, so that alone, and it is interesting. Like, this decision, it's not about Kalshi. I mean, the CFTC's order didn't just approve Kalshi; it opened the door for any DCM to go ahead and self-certify similar crypto perps. And within days, you saw Kalshi self-certify. I think it was over a dozen additional perps. You saw a bunch of other shops kind of change their long-dated perp-like product to a true perp. And we're talking billions flooded in within days of this order. And as part of the complaint, I mean, you can't sue someone if you can't prove damages. And the complaint addresses this by saying the CFTC's action inflicted textbook competitive injury. But I would actually argue with that. Now, I mean, yes, there might be injury potentially by giving Kalshi and others a competitive advantage, like a time-oriented market share advantage. But even without this approval, CME was facing enormous competition overseas. Like, there were US market participants and other market participants that were trading perps overseas instead of dealing with CME for hedging and diversification purposes. So it's not like, oh, Kalshi's allowed to do this and we're not allowed to do this. Like, the alternative to filing this lawsuit is just to immediately launch a bunch of perps and use their own presence in the market to do this. So query whether they really hope to win this lawsuit, or they're making a point here.
Right.
Yeah, so it's a great point about, I think, like the nature of competition in some of these suits. I mean, there's folks who have argued that the stablecoin yield conversation, as far as it impacted like Clarity, was largely an opportunity for banks to catch up. A longer window took up a lot of the legislative agenda as well. But I want to get to like what happens for crypto if CME wins. Like, how do you see this impacting the CFTC oversight of like crypto derivatives markets? And then if CME does lose, as you just pointed out, like if they do lose, then they can just rip their own perps, right? But what do you think of kind of those two like dueling outcomes here? Like, what happens if this goes CME's way? What happens if this goes Kalshi and the CFTC's way?
Well, it's funny because, as you guys know, Kalshi isn't crypto.
Right.
So it's like we're having the same issue that we have with prediction markets, where everyone conflates prediction markets with crypto, and a lot of prediction markets have nothing to do with crypto. I mean, look at Rothera. It's the same with perps. A lot of these, I mean, Kalshi inherently, it's not a crypto company. And we've already seen TradFi entities trading a lot of crypto products. It's not, and they're not crypto natives. I mean, one of the reasons I know so much about this, in addition to my work on the board of Architect, is I'm formerly chief legal officer of Cboe Digital, which is, an old school, the other elephant in the room in Chicago, I may say. And so the question really, I think this is less about crypto, but more about like kind of people are calling it David and Goliath, and there's some truth to that because CME is such an institution. I mean, they've been around for more than 100 years, and Terry Duffy's nickname was the sixth commissioner for a while, meaning he had enormous influence over CFTC policy. And to be clear, I'm not saying there was anything inappropriate about that. It made sense for CME to have this kind of influence because CME's business makes up so much of the volume that existed within the CFTC's jurisdiction. And, they really cultivated a good relationship with the CFTC. So this is more of a question of kind of disruptor versus legacy institution. And I don't know if perps and who wins perps are really going to be determinative, because this is one fight. We're seeing that fight real time within a slew of different, kind of products and sub industries. But if CME wins this, or if they're able to delay this, it will, naturally give them a huge advantage. It will allow them to kind of work on perfecting their products, to kind of build on and gain more market share, and it will make it harder for those disruptors to get involved.
Makes sense. Thank you, Katherine, as always, for joining. We'll see you soon.
Thanks so much for having me.
Thanks, Katherine.
Thank you.
Well, with the Blockchain Regulatory Certainty Act, we are not going to go there just yet, but we're going to go back to it. A topic we cover extensively here on Crypto in America is how digital assets are moving into the financial mainstream. And as regulation has matured, so has the need for the compliance infrastructure that makes that adoption possible. Joining us now is Ilya Brovin. He's the Chief Growth Officer at Sumsub, a compliance platform and one of the largest providers of KYC, AML, and fraud prevention software for crypto firms. Sumsub is also a sponsor of our podcast. Ilya, welcome.
Thank you.
Welcome on. How are you doing? Good to see you.
I'm doing well. Thank you very much. How are you?
Good. So let's get into it. As a full cycle verification and fraud prevention platform, as Sumsub is, let's talk about some of the trends that you're seeing across the crypto industry today, and kind of what's the most, we can get into some of those, but go ahead. What are some of those trends that you're seeing that kind of stand out and you think our audience should be aware of?
Very broad topic in terms of which trends are happening. There's obviously a lot on the regulation and sort of compliance side. As crypto regulation is getting traction across different parts of the world. Crypto is becoming much more of an accepted asset class, payment means, financial product. Obviously, the way people are accessing crypto is changing. The way regulators are crypto is changing. So that's one set of trends. There's the fraud side of it. What's happening on that end? Happy to share some insight on that. What do you think is more interesting right now for your listeners?
Yeah, definitely on the fraud side. I mean, we've been seeing a lot of hacks in DeFi lately. We've covered that a lot on the show. Maybe some of the trends that you're seeing that maybe aren't getting talked about enough or getting enough attention.
Yeah, obviously, fraud happens at multiple stages in the sort of in the life cycle of anybody's interaction with crypto. We are mostly focusing at the point of sort of entry, right? When people are trying to open accounts, which are then potentially misused somewhere else. And one thing we've obviously seen, deepfakes have been a big trend over the last couple of years. I don't think that's as exciting news, let's put it this way, but we definitely see, a big trend towards increase of use of that. But AI more broadly is coming into play much more. And if we've seen like AI being kind of used for generating those fakes, generating synthetic documents, what we now see is AI is being used to, AI agents are being actually used as the means of attacking systems. So you can now fully automate how you try to bypass KYC procedures and on the fly change inputs into that and kind of try to find those loopholes. I think that's a very noticeable trend that we see for sure.
Yeah, I'm glad you brought up AI agents, because that's something we've talked about on the show. And I know you've spoken about literally 5 seconds ago, but also recently in general. And we saw the other week that Coinbase launched their agent advisory service too. And so as these agents become capable of handling payments, transactions, online activity on behalf of users, what are the new risks emerging that you think people should be aware of?
Well, I guess there are two sides of it, right? On the side of the consumers who are using agents, right? What can happen with their agents? So let's leave that aside. But I think for anybody who's kind of on the receiving side, agents interacting with your system, in the past you would say, a bot, as a non-human is a risk factor, but now it's going to be your representative. So the main questions that arise there are is this agent actually acting on behalf of the person they claim they're acting on? And secondly, do they have the authority to act in a particular way, to make certain decisions, to buy certain things, sell or trade or make certain payments. I think those things are top of mind for anybody who is sort of working on building agents into the everyday financial system. I don't think there's a good answer for it yet. There's both the fiat side working on their protocols and the crypto side is working on the protocols. We are doing some work on the crypto side, obviously. We're doing a lot of work on reusable identity in general, but some part of it relates to on-chain, reusable, programmatic identity, and that can be used as a nexus to identify agents that are, tied to a wallet, acting, with a wallet attached, and they're using stablecoins for payments. So, yeah, there's a lot of innovation happening in that area right now.
Yeah, Ilya, how do you feel about the way the identity verification and KYC space is going to change? Traditionally, a lot of people think about it as onboarding. I'm opening an account, I put in my wallet, verify my address, driver's license, whatever. But you've talked before about sort of AI fighting AI and looking at more of a continuous monitoring system. Why do you think the just onboarding sort of upfront is kind of outgoing an account? I put in my wallet, verify my address, driver's license, whatever. But you've talked before about sort of AI fighting AI and looking at more of a continuous monitoring system. Why do you think the just onboarding sort of upfront is kind of outdated, and how do you see this developing?
No, come on, it's not outdated. It's a definite requirement, and it will need to continue to be fulfilled. It's becoming much more difficult to make a final decision, once in the beginning of the lifetime of a user, at onboarding, and then just kind of assume everything is fine, right? And so that's where monitoring the user's activity, transactions, patterns becomes very, very critical. It's just more of a recognition, the fact that it's not sufficient just do the onboarding, because also there's an onboarding, there's a compliance element, you should check what you should check, right? Establish the person, check for AML list and so on and so forth, right? But then there's the fraud aspect of it. Is it actually the person you think is opening the account? And nowadays, with the advance of AI, specifically in the deepfake and the synthetic document space, I just say it is kind of a fact that it's becoming much more difficult to establish that trust in the beginning and continue trusting it with no ongoing verification. So we've built our platform in a way that monitors the user's activity and behavior throughout the lifetime, and that actually brings a lot of synergy to that. You know the source of truth, kind of, what you know of the person from the beginning, and then as you monitor activity, their logins, their transactions, if you see anything suspicious, you can sort of flag this and find out if it's a potentially you were defrauded, it was a mule account, an account takeover, or something else. So yeah, definitely ongoing monitoring of the user activity becomes a bigger part of the overall compliance posture.
With regulation becoming much more front and center today than it ever was, do you think that having a compliance program is, for a company, much more of a competitive advantage today than it ever was before? How are you seeing that space evolve with the clients that you serve, and sort of it coming up as a real necessity in 2026?
I mean, I don't think there's ever been a question that it's a necessity, but I think the obviously regulation has been catching up with the evolution of crypto, and it's all very normal that regulation comes sort of behind, right? But I'll give you an example. In Europe, MiCA should be in full force in less than a week, and we've seen some countries have given in the past licenses to more than several thousand VASPs, and nowadays they're toning down to 2 or 3. So the ones that are remaining with the new MiCA licenses are obviously the ones for whom compliance has been a core function. And if you think about it, effectively, they will have much less competition because there will be much less, but much better organized and compliant players in this market. So it is definitely a competitive advantage. I think regulation in the US, has kind of been a little bit behind Europe as well. And that has created a lot of risks and uncertainty for crypto players. So nobody really knew what to do about it. Lots of crypto players we've seen were actually shying away from the US. And now that regulation is actually picking up, it's kind of reversing the trend. So I think that's a good thing. So compliance, is definitely an enabler for the growth of the crypto market, for accessing new channels, for giving much more parts of the population access to this innovative product.
So do you ultimately think that identity and compliance will eventually become embedded infrastructure similar to the way wallets or payments are right now?
I think a lot of the industry is working towards that, and like the holy grail here is, obviously everybody says like verify once and, never do it again. It's not really how it works. And that's not really what regulation was designed for. Every financial services provider, should know their customers, by themselves rather than just rely on anybody. But certainly where there is a gap is that the way these systems, and I mean just the general KYC has been designed over time is very manual to a large degree. It's off chain. You should keep personal data and all of this. So I think there is definitely a gap between what technology and the cryptographic certainty can add to these processes and what the regulation still allows today. So a lot of the partners we're working with, working to develop these on-chain identity standards, like Chainlink is one of the partners I can mention, right? They built a cross-chain attestation system in which we will be issuing attestations. They built a policy engine, right? But still, even though a lot of these attributes can be programmatically read online, the regulation still requires that you have access to the underlying data. And so for now, we are definitely working to kind of bridge that gap. But I think there will be a new sort of step when regulators and regulation gives more credit and allows certain on-chain and reusable identities to be kind of natively used within the products. So yeah, that would definitely be a big step change.
Yeah, Ilya, I think the industry has been looking for like portable identity for a while now, right? Like we've had previous kind of maybe like a Quadrata or some of the other folks in that space who are trying to do, portable digital identity. And it seems like whether it's a UX thing or like maybe just a lack of adoption in a lot of places where people are interacting, it's always been kind of slow to pick up. What do you think is like new or interesting about the concept of like portability and attestations now that like is makes now kind of the right time to be rolling all this out with all the partners you guys have been able to work with?
Very good question. So the reason why a lot of the projects didn't work, and I think they were based on like that premise that I think it doesn't work from a compliance point of view. Like you verify once and everybody else trusts it, and that doesn't work. It requires a concept that's called reliance, which is extremely hard to establish, especially across a wide number of partners that maybe don't even know each other. So let's put this to bed and ask like, okay, so today regulation requires every financial services provider to have done their own work. But on the other side, on the other end, that creates a lot of friction and drop-offs and like just bad UX. And so I think the first step is kind of trying to fix the UX without trying to change the compliance posture of it, right? So what we're doing in our reusable identity product, which is like the core of what we're doing, is we're saying, look, if we've seen a person once and they've provided their documents to us via their client, the other way around actually, to our client via us, we have that data. So maybe if all the other parts are established correctly, as in like data access and privacy and everything, like if we can let this user reuse their documents and without having to upload them again, that actually creates a much better experience. Doesn't have to do that, less drop-offs, quicker, also more secure, right? Because if we've known that person for another client for some time, that's a good signal they're a legitimate user. So that's what we've productized in several ways. People can store identities directly with us and reuse it across the whole ecosystem. We also allow our clients to create their own communities, if you want to call that, of trusted partners with whom they want to share, because obviously they want to share. Not everybody wants to share with the whole world, but it's all about kind of the optimizing the UX and allowing people off chain to reuse some of the artifacts that's submitted before. But that creates a foundation then for, can you then, let's say, publish on chain something that points to that record that is off chain, right? And then you can kind of bridge the two worlds in a way where some initial identification and trust can be established based on something that has been published publicly without disclosing PII. But then for actual compliance, you know where to go to. You know how to run your own compliance policies as opposed to relying on somebody else's compliance policies. So that's kind of where we are. We're bridging the two worlds. And like I mentioned in my previous answer, like if the regulators ultimately say, well, the on-chain part, kind of the non-PII exposing part, is good enough for compliance, then I think there'll be even more emphasis on using those type of products.
Ilya, as we wrap up here, what should our listeners be looking on the lookout for when it comes to Sumsub in the next couple of months?
I think this reusable identity product suite that we've been building now for more than 2 years, 3 years, is actually coming to a very exciting place where I think you will see a lot of adoption being driven, and I think the stable coins, is actually an enabler for that. So look out. There will be, I think, several what you can call nowadays kind of modular stablecoin based neobanks, right? That have an unhosted wallet in the middle. Will sort of introduce some of our products that will help users significantly improve UX experience as they try to use multiple fiat partner products from their self-hosted sort of core cards, on-ramps, IBANs. So yeah, that's coming.
Great.
Yeah, a lot for us to keep an eye on then. Ilya, thank you so much for coming on today.
Thank you for having us.
Thanks.
Cheers.
Well, with the Blockchain Regulatory Certainty Act still a key sticking point in negotiations over the Clarity Act, law enforcement remains at the center of that debate on Capitol Hill. Joining us now is someone who has years of experience busting on-chain criminals. Matt Hogan is a detective with the Connecticut State Police, a task force officer with the U.S. Secret Service's Connecticut Financial Crimes Task Force, and a co-founder of the Connecticut State Police's Cryptocurrency Working Group. Matt, welcome on.
Thanks for having me.
Yeah, welcome to Crypto in America. We spend a lot of time on this show talking about policy in Washington and sort of the theory behind a lot of what's going into the Clarity Act, but you're actually on the front lines, busting on-chain criminals, investigating crimes every day. What does that look like, and what are the biggest scams that you're investigating right now?
I mean, pig butchering is always the top of the food chain, I think, unfortunately. A lot of dollar losses there, a lot of victims across the board. Obviously, our elder community is hit pretty heavy with that, with the dollar losses from IC3 recently showing significant losses there. But I mean, we're seeing everything.
Pig butchering is romance scams?
It's an investment romance scam mix, correct?
Got it.
Yeah, but you're seeing everything across the board. I think what we're noticing now is as the landscape is improving for crypto, I think we're seeing a big shift in their typology. They're actually diversifying. So you're not just seeing pig butchering scams anymore. You're just seeing them do those as well as investment scams. You're seeing pop-up window scams for viruses, everything across the board. So it's an interesting time.
Yeah. Have you noticed it getting worse or better?
I feel like there's lulls, right? I think as things happen, you'll see ebbs and flows with everything, but it's been consistent, that's for sure.
Yeah, we talk about the Clarity Act a lot on this show, and we would love to kind of get your take on how important the passage of it would be to the work that you do every day, and maybe with these scams in mind.
Yeah, I mean, honestly, I think I find it funny because I'm obviously talking from my own perspective, not like state police or anyone else. But when I look at these things, and I see law enforcement putting out these memorandums, and they're putting their own 2 cents in for the Clarity Act, I just kind of laugh a little bit, only because for so many years I've been trying to get the attention of law enforcement nationally for just financial crime investigations, for training and education, because across the board that's not happening. But apparently they have enough understanding of the Clarity Act now to put their own 2 cents into it. So I thought that was interesting to see that, especially for cryptocurrency. So I mean, it's important for us because my goal is obviously to seize and freeze assets for our victims. And how do we do that, right? I think you have to have a good legal basis for it. We don't want to take money that doesn't belong to us, obviously, but we also want to restrict or kind of pull back money from bad guys that are using it for illicit purposes. So having something in place that actually gives some guardrails is important, but I'm also like a crypto fan, quite honestly, so I don't want government getting involved in too much stuff either, right? So how do you like balance that? I think is a big question.
Yeah, one of the arguments we've heard, just switching into like the BRCA specifically, and I know there's been some, it seems like differing opinions from law enforcement groups more broadly about whether or not the text kind of stands up from a prosecution perspective. One of the arguments seems to be that tools like mixers, and we've seen like Roman Storm and Tornado Cash obviously working its way through the courts, makes investigations significantly harder. You just mentioned a lot of the things that you're seeing on kind of a day-to-day level, and we know that federal law enforcement uses a lot of tools like chain analysis and TRM already in terms of catching some of these guys. But with that specific concern versus some of the broader like investment scams, pig butchering scams, where do you think the biggest emphasis should be from a law enforcement perspective on like whether the BRCA kind of goes far enough or not?
I mean, it's tough, right? So I think this, no matter what we put on paper, the people who are creating these programs and protocols are going to adapt regardless. So whatever we put on paper is going to have to be changed in probably a couple weeks or months. So my concern is getting money back for our victims, and how do we do that? And I also don't want government infiltration too much into people's privacy, right? So again, how do you do that? And I think info sharing is a big part of that. I think having maybe some kind of analytic mandates, so these organizations have to check their on-chain activity. Maybe some kind of, I mean, we already have examples, right? We know Tornado Cash, we know Railguns, we know coin joins exist out there and how they function. So I think if we maybe put some more narrow definitions in place instead of such a broad exemptions, because I think when you read it, it seems very broad. That's what I think what the major law enforcement organizations are scared of, is that it's so broad that you can kind of find some gray areas to mix in, which they're going to, right? So I think having clear intent, and I think something we use in law enforcement, I think it's called KIV, so knowingly, intelligently, and voluntarily. So if you can prove that an actor is developing a protocol or a software for those purposes, I think that's kind of maybe that activity-based trigger that we're looking for to maybe add some AML obligations for those particularly high-risk ones.
Yeah, Matt, the BRCA has become such a headline talking point, I think, for clarity, and especially where law enforcement is involved. But that is arguably a very small part of the bill, right? It's Section 604, but then there's the whole Title III, which enables a lot of things that law enforcement currently can't do when it comes to busting on-chain crime. I think we have a full screen of some of the things here. It provides additional resources for federal, state, and local law enforcement. It also provides preserves some of those existing AML, BSA investigative tools. So it doesn't actually change much when it comes to going after these criminals on chain. Doesn't change anything you can do now. It just adds a lot more things you can do that you currently can't. So when it comes to outweighing, sort of the pros and the cons here, I mean, from your perspective, for the Connecticut State Police, is this something you guys are looking at as a net positive, the Clarity Act passing, as opposed to, sort of the alternative of what you guys have now?
Yeah, I mean, honestly, we just need something on paper, right? I think getting something out there would help, because it's just me from my agency, and that's across the board nationally, and that's kind of the issue, right? I think we don't have enough people doing this work, and if you have something on paper that kind of mandates the ability to get the tools out there to people who need it, that's what's going to help us do this or fight this battle. So having education, tools, resources available to us, because I think people so much rely on the feds for things, and it's really, quite honestly, unfair to them as well, because the burden on their shoulders that's a lot, right? And they obviously have certain restrictions for case investigations, for whether it's dollar threshold limits, all those kind of things, right? We don't have that. So how do I now work those cases that aren't on the same playing field as the federal ones? We need the tools and resources to do it. So getting something on paper is just paramount, I think.
Yeah, Matt, before we let you go, I want to ask you just one follow-up question on what you just mentioned, which is, wanting something on paper. I think one of the industry's perspectives has been kind of, do you want the ability to catch more criminals or less criminals, just based on the idea that so much of this activity is taking place offshore already. What do you think would be a potential solution, or is this the best solution we have, Clarity passing, for law enforcement? And yeah, it's kind of a little bit of a leading question, but would it be better to not have this version of Clarity with kind of this text and the BRCA go through, or do you think that there are other paths forward here to fix some of these issues?
I just don't think we're going to know until it passes, quite honestly, because we're going to see things shift and change, and we're going to see how state and local adopts to this. And that's going to be the biggest question, because we have task force officers that are set into the federal program, so we have that capability. But are there enough of them? Would this bill being passed assist in that or eliminate? We don't know. I don't think so. At least knowing that having it on paper and passed, that it gets tools in the hands, I think is the biggest help for us. But like I said, I just don't. We're not going to know until it really hits paper, because then we're going to see the how the bad guys adapt to it, right? I want to be able to freeze and seize assets, and USDC, USDT, all those things. How do we do that without the assistance of federal government? So,
Matt,
Yeah.
just quickly before we let you go, if you could quantify it, on a state level, how much cryptocurrency crime and fraud, takes place on a daily basis or in a year? Can you quantify it?
I mean, I could tell you from our state, obviously, because I'm the one and only ones doing it here.
Yeah.
So it's significant. So we've had drastic reductions. I just posted about it on LinkedIn the other day. Our crime reduction for violent crime has gone down dramatically in the state, which is awesome. But fraud is way up. And I think nationally, that's the biggest problem, because people focus so much on the violent crime because it's what's sexy for TV, I think, unfortunately. But fraud is impacting everyone across the board. So I think that's where we're seeing the trend is now. We're moving away from violent crime, or the violent criminals moving into white collar, because it's lucrative. It's not as violent, obviously, and I think the prosecutions are a lot lower too. Plus, we have the international basis for it as well.
Talking millions, billions, hundreds of millions?
Hundreds of millions in Connecticut for sure.
Got it.
Wow.
Matt, thank you so much for coming on today. We really appreciate it.
Thank you for having me.
Thanks, Matt.
Thanks.
All right, guys. That takes us out. Another Friday. And next week, I think we're off, right? Because it's the 4th of July. So we'll be back the following week.
Yep.
Yeah.
Sounds like a plan.
Sounds like a plan.
Have a great
Back
weekend,
from
guys.
Spain, Jackie.
Yeah.
Yes, thank you.
See you guys next week.
I will.